One major point of concern for leaders attending the summit is North Korea's successful test launch of an intercontinental ballistic missile capable of reaching Alaska or Europe. The president responded while in Poland.
As far as North Korea is concerned, I don't know. We'll see what happens. I don't like to talk about what I have planned, but I have some pretty severe things that we're thinking about. But I think we'll just take a look at what happens over the coming weeks and months with respect to North Korea. It's a shame that they're behaving this way, but they are behaving in a very, very dangerous manner, and something will have to be done about it.
World leaders are not the only ones watching North Korea closely. Investors are as well. Franklin Templeton Emerging Markets Group Executive Chairman Mark Mobius is joining me right now. And Mark, it's good to see you.
Nice seeing you.
Thank you so much for joining us. Good to have you in New York so that we could talk in person. Is North Korea a concern for the way you allocate capital? How do you see the North Korea story?
It's definitely a concern. There's no question about it, because anything happening in North Korea will affect everybody and everywhere in the world in one way or the other. But we do have a lot of investments in South Korea. And we've been living with this situation for a long, long time. I mean, the threat from the North has been there since we started investing 20 years ago in Korea. So the North is very much in our mind, but now, of course, it's much more salient. Things happening now could have tremendous effect.
Yeah, I want to get a couple of news events in front of you to get your reaction to some of these things, and then for the rest of the show, really drill down on how to allocate capital in this market. China is obviously one of the big stories when it comes to North Korea. You're invested in China.
Yes.
Do you think China could be doing more in terms of reining in North Korea?
Definitely, they could do a lot more, but they're afraid of a number of things. One, a mass of immigrants coming from North Korea into China, which will unsettle the situation in North China, and also they're afraid of the merger of North and South, which could create a real problem depending on how the politics in that combined entity take place. So I think China is playing it very, very cautiously.
Yeah, they sure are, because they don't want to see democracy take place next door to them. They don't want to see an upheaval of the government in North Korea necessarily to have all those refugees coming into China.
Exactly.
Let me move on to Europe. The ECB signaled in the last 2 weeks that maybe the stimulus would start to wane. Your thoughts on the European Central Bank and investing in Europe right now?
Well, what's happening now is the euro is getting stronger against the U.S. dollar, so you're seeing a migration of money into the EU and into the euro. So I believe the European Central Bank probably feels stronger and an ability to begin to wind down the tremendous stimulus they've had. You must remember, they've been very cautious in their stimulus measures. They've been much more cautious than the Fed in that regard.
Implications of that, winding down the stimulus in Europe?
Implications are European stocks look good and they'll probably go higher. They'll probably outperform the U.S. market for a while. So I think this is what we're going to see going forward. All
right, we'll talk more about that in terms of allocating capital. The other big story, obviously, for investors, the jobs report coming out on Friday. The June number was much better than expected, 222,000 jobs created in the month of June. Virtually every sector saw job creation, including government. And I guess this gives the Federal Reserve cover that, yeah, they will raise interest rates second half of the year.
I think the debate in the Fed is now very, very intense, because some of them are saying, some of the governors are saying, look, let's not take one measure as a sign that we should do something, while others are saying, look, now's the time for us to move, given the jobs report, so forth. So I think they're still debating, and they'll move very, very cautiously.
All right, so they're going to be cautious because we're still talking about an economy in the U.S. that's really slow moving. I mean,
Exactly.
Mark, the last GDP number was 1.6% or 1.4% growth.
Yes, exactly. And Trump, of course, wants to see 3%.
Right.
So I'm sure there's going to be a debate within Washington on what to do and what the Fed should be doing.
Do you think
forward.
we will see 3%? Is that a signal for you that, yeah, I want to invest more in the U.S. when you see something like a 3% GDP?
If they're able to implement the tax reform, lower taxes, if they're able to get the infrastructure program going in a big way, then you could see 3% growth in this country. Do
you think we will get tax reform and health care reform done this year? There's all of this conversation about a timeline happening. If they don't get it done in 17, they'll lose seats in 18 and perhaps put the whole economic agenda in jeopardy.
So I don't think health reform is going to come easy. It may not happen. But I think the tax reform will take place before the end of the year. I believe that's something that is quite possible.
They want to lower taxes regardless.
Exactly.
And do you think that moves the needle on economic growth, tax
Definitely.
cuts?
It has a big... That combined the reduction of bureaucracy and impediments to growth within the small and medium sector is very important.
Great analysis there. We touched on all the big hot spot stories of the week.